Hi, and welcome to tonight's webinar. Steve McKnight here, of course, and hello to those people who are watching the recording of this who couldn't make it live. Tonight we want to be talking about further information about the proposed resolutions that are before investors in the Passive Income USA Commercial Property Fund. And I need to start with a disclaimer. You guys can probably recite this with me by heart by now. This information is of a general nature only, does not take into account your objectives, financial situation, or needs. You should consider the supplementary product disclosure statement issued by Plantation Capital Limited in deciding whether to acquire an interest in the Passive Income USA Commercial Property Fund. Past performance is not a guarantee of future performance. No earnings estimates are made. Little bit of legal clarification for you. Just, the purpose of this webinar and video is to give you some more background information, indeed to be here live to answer questions if you've got any. It does not add to the formal legal notice that was mailed and emailed to you. So to the extent that there's any inconsistency between what was mailed to you and emailed to you in this video recording, refer back to what was mailed and emailed to you. So that said, if you haven't received an email and if you haven't received something in the mail, particularly in the next few days, you need to get in touch with us so that we can follow up and find out what's happened. It was mailed out of Melbourne Friday last week and Monday this week. What are we going to be covering on this webinar? First of all, resolution number 1, clarifying the REIT and funds wind-up dates. The second resolution, to increase the cap so that more people can invest and existing investors can top up. We're going to be talking about how to cast your vote, and then we'll have a period of Q&A. So our first resolution, let's read it together. To ratify the decision of the directors of Plantation Capital Limited to wind up the REIT structure on or before 31 December 2028 and to wind up the Passive Income USA Commercial Property Fund on or before 31 December 2029 and return all capital to members. Now, in order to explain what's going on here, I need to just drop you back in the TARDIS, go back in time to about 2011 when I was putting the product disclosure statement together. And people were asking, Steve, I'm all right to invest in this, but I want to know that you're not going to start it up and then go elsewhere. So what guarantee can you give me that you'll be there to manage the fund? And indeed, I was very conscious of the obligation and the commitment that I was giving that I needed to make this fund the priority above PropertyInvesting.com, the priority even above my own investing, to try and make it the most successful investment that you've ever been a part of, and obviously because I'm an investor in the fund as well, a great investment for me too. So in thinking about what I was willing to commit to, I thought, well, look, 10 years is a chunk of time, and then also in 2022. That will be my 50th birthday. So I decided that I'd be happy to give you a guarantee to make this my focus and stick with it until I was 50. I need to also say, don't forget that at the time when we started the fund, there was a little bit of doubt and uncertainty around what assets we're going to buy and how the fund was going to be managed in Australia and the US. I knew it was a great opportunity. I knew that Aussie dollar was high. I knew that commercial property in the US was low. We had Stu Silver setting things up for us over there in the United States, and we were building a team here in Australia. So it was sort of very, very early stages, and there was a little bit of doubt about that. And of course, the plan, as outlined in the product disclosure statement, was to set this up, run it for 10 years, and then hold a meeting in 2022 and decide whether we want to wind it up or start to wind it up, or alternatively continue on. Now, that's not to say that it was automatically going to wind up at the end of 10 years. The plan was, as I said, to hold a meeting and for us to think about, well, if we do want to wind it up, then we can start. It might take a year or two to wind it up, and or otherwise we'll keep it going. And that would have been the meeting that we had and the resolution before us at that time. If we didn't get 75% of people eligible to vote and turning up, deciding to wind it up, then we would have had to have reassessed the strategy. So we're sort of bringing this vote forward, and the reasons why I want to bring this vote forward to sort of now and just change the language a little bit is because I believe there are a lot of benefits before us if we can lock in a timeline for the fund in regards to future planning. And without that, if we just let another 4 years go by and then in 4 years' time we decide we want to keep the fund going, then I think we will have missed an opportunity. Indeed, in 4 years' time, if we meet and decide we want to wind up the fund, then some things may happen over the next 4 years that compromise, I think, the performance of the investment beyond the next 4 years. So let me speak a little bit more about that, because these are the practical problems that I'm facing. The first one is that when we bought some properties, we've got debt on those properties, some vendor financing, and that vendor financing is starting to mature. We've got a property at the end of the year and a property at the start of next year that we want to hold. They're performing well. However, debt is due to be retired on those properties. Now, the only way that we can retire debt on those properties cost effectively is not to refinance if there's only 4 more years to go, because we can't amortize the refinance cost over 4 years and make it commercially viable. We're going to have to sell those assets. The problem with selling those assets is, are we able to replace that money back in the market at the same sort of return? And the answer is, at this point, no. So there's a little bit of a problem here in that, yeah, ideally we got the finance, we kicked the can down the road, but we have to refinance these assets, or we have to sell them. If we have to sell them, then what are we going to do with the money? Do we return it back to unit holders, or do we reinvest it? What if we can't reinvest it at the same rate? The second issue we've got is I still do get good deals come across my desk from time to time, but with only 4 years until a possible start to wind up the fund, the economic case for purchase is compromised. You know, it costs a lot of money to do the due diligence on these properties. It costs a lot of money to sell them. If we're only going to own them for 4 years, and remember, we're not a value add fund, we're a buy and hold fund, although we do look to value add when we can. The runway, the investing runway, is pretty short. So we'll be paying a higher price because the US properties are more expensive and yields have gone down. And just for 4 years, I do get good deals, but I wonder about the merits of buying them. And then we've got the asset realization story. So we would have been waiting until 2022 to possibly start selling. That creates unnecessary uncertainty. If we knew how long the fund had to go and that was a locked-in date, then we could start spot selling assets strategically rather than waiting 4 years and seeing what happens. So we can really start to forward plan, as I'm saying, with more certainty if we lock in the fund and the REIT's life now. This fourth point is also very important because we don't want to lose key staff, and one of the reasons why staff will eventually move on is lack of job security. So at the moment, the people in Australia and the US, I'm sure, do know that the fund might only have 4 years until it's voted that we start winding it up. I'd much rather know that we were going until the end of 2028 as a maximum, and then there's more longevity, and then build in longevity incentives, staff loyalty incentives for people that stay with us to the end. So this will really, I think, help us get a better management solution and a better staffing solution, and a win-win for everyone. So what's the situation now with the portfolio? Well, it's stabilised. We do have a couple of properties that we've still got a little bit of work to do because tenants have moved out. The old Pitney site, for instance, we got AutoNation in, but we've still got some backfill rental to do on the other side. But generally speaking, the assets are performing really well. I got up early and had my fortnightly meeting with the team in the US today, and our vacancy is sitting at about 6.5% now. Rents are on the way up. It's all good news, really. And at the unit holder update, we'll be presenting the financial story for the year end 31 December 2017. And aside from the Aussie dollar, which hurt us, the capital appreciation and the rental returns for the fund have been strong. So that's great. I think we have a very good management team both here in Australia and also in the US. In fact, the management team have told me that they've got capacity to be able to cope with more without having to hire more staff. So that's hence part of the reason why we can increase the cap as well. The US economy is strong, notwithstanding the stories we hear about Donald Trump's latest tweets. Unemployment's on the way down. Interest rates are on the way up, indicating that the economy is recovering. There's nothing really to be worried about in terms of the United States economy at the moment. In fact, I'm more worried about the Aussie economy than the US economy. And then I asked myself, what's the better opportunity? We want to earn a return, and I've been trying to buy commercial property in Australia on 6 or 7% yields, and it's nothing to get excited about. I mean, these assets that we own are performing. The time to sell a piece of real estate is when you can do better with the money, make more money sooner, less risk and lower aggravation. And given that we're stabilised, the portfolio is performing well, the management's set up, we should just sit back and let these assets do what they're supposed to be doing, in my opinion. So what's the proposal? The proposal is to wind up the fund on or before the 31st of December 2028. Now, this is important because I'm not saying that we're going to go till December 2028 and then start to sell. I'm talking about strategically starting to sell the assets probably in about 2025. And then just drip feeding them into the sales funnel so that we're completely wound up on or before the 31st of December 2028. We may get a situation, for instance, where the Aussie dollar plummets against the US dollar down into, and let's get a bit greedy and fantasize for a second here, somewhere in the 50s. And we may just say that's it, regardless of the assets, the fact that the Aussie dollar's fallen so far, let's hedge, let's take away foreign exchange, let's lock in this rate now, let's start selling these assets and the fund's over. But at least we know a maximum period of time. And as I've mentioned, when you know a maximum period of time, you can start planning with certainty rather than the situation that I sit in at the moment with 4 years of runway and then not knowing what's going to come next. So we're not really talking about extending the fund for 5 years because it would take a couple of years after 2022 to wrap the fund up anyway. What we're talking about is really extending the fund's life to a maximum of a further 3 years, knowing that we're not going to go anywhere beyond that. Now, once we've wrapped up the REIT in 2028, that's the asset sold, we just probably need a year. We won't be holding back the money. We'll be returning it to investors, I think, quarterly. That's the plan. But we need another year to wrap up the fund, just all the legals, dotting I's, crossing T's, etc., etc. So that's why we give ourselves another 365 days just to collapse the fund too. That's why there's a difference between the dates, in case you're wondering. So a little bit of a what if. What if you don't want to wait until the end of 2028 or when we start returning money sooner if we start selling assets? What if you want your money sooner? Well, that's a fair question. The annual redemption offer that we've been holding, as outlined in the product disclosure statement, will continue. We're not going to suspend that. So there'll be a sum of money every year to fund redemptions. And then, if needed, I can see us doing a survey in 2022. Hey, are you planning on redeeming this year? And the directors, of which I am one of them, we want to try and do our best to create, we'll call it a bigger redemption opportunity in 2022. So for those people that came in at the start of the fund, had that 10-year horizon, want to get out in 2022, we're going to do everything that we can to have a bigger redemption that year if people need it. And that may mean an asset has to be sold or some refinancing organised to allow that to happen. That's fine. We've got plenty of time to manage that. And as I said, you don't have to wait till the end of 2028 to get your money back. Once we start selling assets, we won't be reinvesting that money in buying new assets. We'll be starting to return it to investors. So I would anticipate, without giving you a guarantee or a promise, that sometime in mid-2025 onwards, maybe the start of 2026, sometime around then, as we form our sales strategy, we will be starting to return money to investors as the fund begins its wind-up phase. Hey, Steve, what about previous discussion about there being a tax penalty for redeeming early? Good question. That's been solved now. We changed our policy so that nasty that impacted investors if they got out early no longer exists. No one was affected by the change in the policy. It just allowed us to make, I think, a more equitable situation by doing that change. So if you decide to redeem before the end of the fund, you're no worse off in respect to being spanked for leaving early. The second thing is, Steve, what happens if the eventual sales price is higher than the appraised value? That's true. If the appraisals are conservative and we're able to get a higher price once it eventually gets sold, but you've redeemed early, then there's no further benefit to you. But remember, by redeeming early, then you're out of the risk. The risk is gone. So those people that do stay until the end hopefully will be rewarded for the risk they take by carrying the investment through to its entirety. So what are the benefits of agreeing or voting for this resolution? I think it removes uncertainty. I think it allows for expansion for me to go and buy some more assets, good assets if they come across my desk. It allows me to better plan for managing debt, both the retirement of debt and the repayment of debt. It's very important because this is now becoming a bit of an issue for me. I don't want to unnecessarily sell assets, trigger capital gains, and then have money to try and reinvest. But it will also allow for me to have a plan and the directors here in Australia and overseas to sell the assets strategically rather than just waiting to the end and then going, boof, everything's for sale, let's get out. Knowing the end date is critical for me, rather than this 4 years and see how we go and then, all right, we start to wind up. I'd rather know now so I can continue to manage these investments as well as I can for you. This would really help me. And of course, as I've mentioned, staff motivation and retention and creating incentives for staff to stay through to the end, taking away the doubt that their job might disappear would be a great help. All right, that's resolution number 1. Resolution number 2. I'll do questions at the end. I can see some of you are popping in questions. I'm not ignoring you. I'm just getting through the content. To ratify the decision of the directors of Plantation Capital Limited to increase the limit on subscriptions of the Passive Income USA Commercial Property Fund to 100 million issued units, not including reinvestment of distributions. So why are we bothering to do this? Well, at the moment, or even to bring you back to how things were at the start of the fund, I wanted to have a realistic expectation about the capital that I could raise and placing that capital and then building that management structure like we talked about. Because I'd never run a fund before, one of the things that I was really careful about was not growing for the sake of growing, but growing sustainably. Because a lot of businesses fail because they can't manage the growth. So that's why I set the cap at 75 million. I thought it was achievable without being scary, but because we didn't have a management structure in place, it wasn't too much money to try and to place too soon. And of course, we were developing systems as we went along. So before we had too much money, we wanted to start slow and gear our way up. But of course, we're now stabilized. The systems are in place. The teams are in place, the staff are in place, everything's humming along quite nicely. So the situation is, as I've mentioned, those risks that existed at the start have been mitigated. The fund's performance is strong, and that's why I'm getting people saying to me, Steve, I want to invest more money if I'm already in the fund, or I want to invest if I'm not in the fund. And I have to say to them, I'm sorry, the fund is full. Now, that doesn't mean that I want to raise another $50 million and run out and buy assets like I'm drunk and crazy. But what it means is I want to try and just gradually give people the opportunity to invest and then place that money or use it for liquidity, as we'll cover in a second. So at the moment, people are locked out. They want to come in, but I can't help them. Indeed, myself, I'd love to put some more money in the fund myself. I can't, other than the distribution reinvestments. So the proposal is to increase the cap up to 100 million issued units, just a nice round number, not including distribution reinvestments. The plan is to then release the capital in $5 million tranches, unless we get a big investor that wants to take a bit more, but I'm not sure that's going to happen. Then once we've got that $5 million of capital raised, we'll temporarily place the money to either acquire more real estate, repay debt, or even... at the moment, what we do is redeem and then open. We might open and then fund the redemption out of the money that comes in so that we don't have to sell any assets to fund those that want to get out. It's a nice little sustainable model if we do that. So the benefits, if we increase the cap, it allows people to invest, creates liquidity for buying more property, repaying debt, and redemptions, and it spreads the fixed costs of the fund over a wider base, which means that existing investors are a little bit better off because those fixed costs, or their share of the fixed cost, is diluted a little bit. Speaking of dilution, won't issuing more units have a dilutive effect for current investors? i.e., if we bring more people in, won't that make me worse off? The answer is no, and to explain this, we need to do a little bit of a case study. I just need to move myself over to here to explain this. If we had $100 of cash and we had 100 issued units, then our unit price would be $1. So $100 divided by $100 divided by 100 units is $1. If we ended up getting more units, more cash, an extra $10 of cash and an extra 10 issued units, yes, we've got more assets, but we've got more issued units as well. So the unit price stays at $1. So no one's being diluted in respect to issuing more shares because the numerator and the denominator increase by the same amount. So don't worry about that in terms of being diluted by issuing more units. That's not going to happen mathematically. All right, so how do you vote? Look, if you can't make the unit holder meeting live or online, or if you want to vote early, there'll be a proxy voting mechanism, which means you can either vote online. There'll be a little link on the website. We're just testing it at the moment. PassiveIncomeFund.com, unit holder meeting, cast your vote here. That'll go live on the 26th of February. It's not there at the moment, but that's how you vote online. You log on, it'll come up with, here are the resolutions, vote for, against, or abstain. Or alternatively, if you don't want to vote online, it's real simple. The proxy form that you got in the mail, you can either fax it back to us or you can mail it back to us. Just make sure you properly complete it because we'll be checking it with the signatories. You just want to make sure that if you do that, you get it back to us by the required cutoff date, which we'll cover in a second. Now, we don't have a facility for scanning and emailing back to us. It has to be either online, by mail, or by fax. So online, we open 10 a.m. on the 26th of February and it'll close 5 p.m. on the 15th of March. So this is the proxy. Fax and mail must be received at 893A Canterbury Road, Box Hill, before 5 p.m. Thursday, the 15th of March. This is what your proxy form looks like. Just make sure you fill in the front, for, against, abstain. Tick if you want me to vote on your behalf. I'll be voting how you direct me. Or you have to put in who you elect to vote on your behalf if they're going to be at the meeting. All right, so you sign the back as said. Or you can come along to the meeting and you can cast your vote in person. We'll have online voting stations at the unit holder meeting, which will be a couple of laptops at the back of the room. You can just go on, type in your details, but if you have any questions or need some help in logging on, Althea will be there to assist. Speaking of needing help, if you need any help in respect to anything I've talked about today, or you're uncertain, you have questions, call the office 10 a.m. to 4 p.m. Melbourne time, 03 8892 3800. Ask to speak to Althea. Or alternatively, you can email Althea at admin@PassiveIncomeFund.com. Of course, you can also email me, and I'm happy to try and reply to emails where possible or give you a quick call and have a chat. I've done that with a few people already. All right, so just as we move on to our period of Q&A, I just want to start by answering a question that I didn't really cover in the webinar, and that is what happens if the resolution is voted down? Look, we say that we're going to reconsider our strategy, and that's short for it's not ideal if it does get voted down because we'll lack the certainty, but we'll run the next 4 years as planned. I think we'll have the meeting in 4 years, and then we'll decide what we do at that meeting. So if we vote no, we kick the can down the road, but then we lose, I think, opportunities in respect to our forward planning and the certainty around management. So I think if we choose not to vote this in, then I'm worried that the performance of the fund will be impacted as a result. I'm not doing this as an exercise because I don't have enough things to do. I'm doing this because I think it's actually important for us as investors in the fund to understand why we're doing it. Resolution number one and resolution number two. And now that you know, to ask questions, but see the benefit of it. Because in my opinion, the benefits, which are many, outweigh the downside, which I can't see a downside that I'm worried about by either of these resolutions coming up. That said, you need to make up your own mind. If you have any doubts, obviously get some independent advice about that. But if you have any questions you think we can help you with, then we're here to help. All right, now I can see some people have been asking some questions. So let's go back and answer some questions that have come up. Robert asks, Steve, are you concerned about rising sea levels in Florida, where the funds are located? Not really, Robert, not over the next 10 years of the proposed fund's life. I don't think that's going to be a problem for us. 100 years from now, potentially. I'm sort of more worried about storm surge that happens when cyclones roll in, but we've got insurance should we be affected by that. I really enjoy the investing strategic education that you deliver, Steve. Lisa, you're more than welcome. It's nice to include people as part of the fund as really partners rather than investors, so that you can join with me and understand what's going on there. With the change in policy with regards to tax implications, is it expected that distributions will continue to be tax deferred? Hey, that's a really good question, Sharon. The answer is no. The reason why the distributions were tax deferred is because we had tax losses at the start of the fund because we had expenses which were higher than our realised income. What does that mean? I'm going to cover this at the unit holder meeting, but the bottom line is, because so much of our profit had been made by exchange gain by the Australian dollar going down, and that wasn't taxable or is not taxable until we bring the money back, we can pay out some of that as profit, but the tax is deferred. Well, those tax losses that we had in those early couple of years while we had more expenses than we had realised income have basically been expired now. So the tax deferred portion of the distributions is about to come to an end or has ended already. So you don't have to worry about that. Expect more profit. Taxable profit is the answer. Pete asked the question, as the funds under management reduce during sell-off, would appear to be a high risk that the admin cost as a percentage will increase to an unacceptably high level. No, Pete, and I see that you've left, but maybe you'll see this later on. I'm aware that as the amount of assets under management goes down, that there'll be a point where the management fee has to increase to cover costs. But remember, it'll be drip feeding the sale. So I think this is an issue to be mindful of, but we certainly won't ever be gouging fees out of members as the fund winds up. Anthony asks, assuming the rising market of the US has resulted in yields going down, hence the buying opportunities are not as great at the start of the investment, won't those invested early be diluted by the poorer returns of further properties, given the large pool of unit price? Well, Anthony, the point is, and it's a point well made, if we can't maintain the average yield in properties that we buy, then yes, if we add lower yielding properties into that mix, the overall yield on a rental return will go down. But the hope is that we get diversification benefits by having more assets, and then capital growth by being exposed to those assets and the market going up. So there might be a bit of a hit on yield, dilutive effect, but there won't be, I think, a dilutive effect on capital return, and even there'll be benefits, therefore, of diversification if we have a broader portfolio, and of course the risks of spreading out the fees across the fixed costs across a wider base. Steve asks, why are the two resolutions one in, all in? I don't understand why we need to vote the same way on both for either to be adopted. Steve, you don't. You can vote one up and vote one down if you want. It's not either either. We could say we're not going to increase the life of the fund, but we are going to increase the cap. If we vote that way, then it's kind of hard to go back to investors and say, do you want to be a part of a fund for 4 years and then we're going to start winding up? But I don't know if we're actually going to wind up or we're going to keep going, or it's just uncertainty. It's a hard message to get across. Or alternatively, if we vote to keep the fund going but not increase the cap, we can do that as well. It just means that the current situation will roll on. It means that we'll have a lower redemption period or redemption amount going forward, probably cap it at that $2 million, and then open back up for investors after that. I'm trying to find ways that we can offer better liquidity for investors rather than lower liquidity. Just coming back to, where did I get up to? Steve, re-dilution of returns. Each unit is worth about $1.40, not $1. So how does that work with your current example? If we had it's the same thing if I had have started with $1.40 and had $140 of cash and $100 of units. If we then do twice the cash and twice the units, it works out at the same unit price, Kevin. So just plug in the variables and play around with it mathematically, and you'll see it's the same. If you increase the numerator and the denominator by the same amount, the unit price stays the same. Does this mean you will be involved until 2029? Yep, Pete, that's right. I'm happy to give an undertaking that I'll continue to work with the fund as I have been, continue to watch over it and manage it until 2029. And that includes also, if needs be, spending some time in America towards the end of the fund to personally oversee the winding up of the assets. I'll be going with what you say, says Wayne. That's great. There's still good deals in the market, says Tony. Look, there are, but it's harder to negotiate. So I had a shopping centre come across my desk earlier on the week at an 8 cap. I replied back to the real estate agent and said, look, I'd be interested in buying it at a 9 cap. The real estate agent basically said, not anymore, buddy. It's an 8 cap. So that said, I haven't been actively looking for properties to buy because we've been at our cap anyway. Have you considered that an Aussie company may want to buy the business PropertyInvesting.com and keep the REIT going? That could be an exit. I'll look at it as a possibility. I think, Linda, you asked that, but I don't think it's our go-to strategy. It's a possibility. Again, I just know the assets that we've bought, some of the smaller mum and dad assets that we sowed into our portfolio so that we could get a higher yield, aren't going to be of a lot of interest to institutional investors. Whereas institutional investors will want some of the set and forget properties that we put in the portfolio. What I did is I spiced the portfolio with higher aggravation real estate, higher yielding real estate, value add real estate to get our return up. But that class of asset isn't of interest to people that want to own Starbucks and 7-Elevens. Annabelle, hi Steve. Will the fund benefit from the future change in the company tax rate? Yes, Annabelle. In fact, it's already benefited. Because our tax rate went down from 30% plus branch profits tax to 21% plus branch profits tax. I think from memory, don't quote me, it was about a $4 million gain for the fund. So whatever you think of Donald Trump, he's done us a favour. Margaret asks, hi Steve, you mentioned there would be a bigger redemption opportunity in 2022 for those people who invested at the outset. Can anyone, regardless of when they invested, be able to redeem at that time? Yes, Margaret. And remember, it's a hope. It's not a guarantee that will happen. But the plan, I think, will be for us to survey all the people, investors in the fund, and say, look, are you planning on redeeming this year? If so, click yes. And then we'll see what the total amount is that people want. And then depending on that, we will set aside, hopefully, a larger amount to fund that. Of course, I don't know what people may say at that time. If 50% of people want their money back, obviously there's going to be a bit of a problem. Katie asks, if resolution is passed, when would it happen? Well, Katie, I'd probably open up pretty much straight away for that first 5 million tranche. I'm going to have to update the product disclosure statement. I've already done that in the wings. It might take a couple of weeks to get that proofed and printed. But yeah, it's going to happen pretty quickly if we want to open it up. Bit of a piece of string, but is the intention that strategic wind-up of assets will be timed to avoid the next GFC-type crash? Asked Sharon. Hope the crystal ball's working well. Well, we can rub the head. The short answer is, of course, we don't want to sell the assets in a down market. So if we know that we want to sell them on or before 2028, we've got a runway to start, as I said, drip feeding the assets into the sales funnel. So we're not exposed to a major risk event in 2028 of the market suddenly taking a dump when we want to sell the assets. It's really beneficial for everyone to know that 3 years before we're due to wind up the fund, we're going to start selling so that we can incrementally divest and effectively dollar cost average our sale over time to reduce our risk. That's a much better strategy than waiting till a date at the very, very end and just going, fingers crossed, I hope the market's doing what we want. Anthony says, thanks, Steve, for all your efforts. Thanks, mate. Hopefully you're going to come to the Sydney one-day event. I'll be able to catch up with you in person. If the resolutions get up, when will it be possible to purchase more units? Michelle, I think I answered that question for Katie. Just give me a couple of weeks and then to update the product disclosure statement, get legal sign-off, and then away we go. And then Brenton via Lisa, good to see you guys online. Isn't the key to the dilution argument that any new investors have to buy in at the current unit price, therefore no dilution? Yeah, they're not getting an advantage. They're getting the same price, which will be based on net assets divided by unit issued units. So hopefully that answers that question. Righto, folks. I see Sharon's asked the question. What's the total number of investors to vote? I'm not sure what the total number is in terms of who's available to vote. In order for the resolutions to be carried, we need 75% of the votes that are eligible to be cast at the meeting that are cast. So if people don't vote, it's not counted as a no or a yes. They're just completely ignored. If people abstain, it's completely ignored. If people vote yes, then it counts for the 75. If people count no, then it counts against the 75. So that's why it's important. I think it's important for people to clue up onto what's going on and hopefully agree with me and support the resolutions 1 and 2 that are put before you. Look, resolution 2 is nice. I think that will help, particularly investors in the fund that want to top up or new investors that want to come in. But really, the critical resolution for me is resolution number 1. Hopefully, they both pass, but I really want resolution number 1 to pass because I think that is important to continue to do what I think is in the best interests of the fund. Question is, will existing members have an opportunity to purchase before new members? Michelle, yeah, you'll have. I can't give you preferential treatment. I've got to treat everyone the same, but you're going to know first and be in a position to take advantage. It is one person, one vote, or weighted per the value of their investment. It's weighted on the number of units you hold times the current redemption value of that unit. So it's not one person, one vote. It's a weighted vote based on the number of units that you have, which makes sense because if you have 100,000 units, then you should be able to carry more weight with the vote that's cast. Good question, Katie. I'm confident of the team management behind the fund. I think so, Steve. I mean, at the end of the day, well, you've been to the US, you've seen the team, you've seen the assets, you know how hard everyone's working here. I've never been associated with real estate that is as well managed as the properties that we have in the fund. Do things go wrong? Of course, little glitches happen from time to time. But in terms of compared to the residential properties that I've owned, it's such a comfort to know that there is great management overseeing the fund. I'm not patting my own back here. I'm talking about the team in Australia and, of course, the team in the United States as well. Dave Hayes says, I think resolution number 1's fair for your planning, Steve. Yep, I don't think it's just my planning, Dave. I think it's our planning. I think the certainty that it gives us is much better than just kicking the can down the road and saying, let's see how things are in 4 years' time. What percentage of the units do I own? Asked Steve. I don't know what percentage. I know that I'm the biggest total investor in the fund if you add up all the entities that own units. But unfortunately, I'm not allowed to vote because of the conflict of interest provisions, because if the fund does go on, there'll be management fees. There'll be management fees anyway, but because there could be an argument stated that I can gain a benefit by the fund going longer or gain a benefit by the fund increasing the cap, therefore I am ineligible to vote because I have a conflict of interest. So I'd like to vote. I'd be voting yes if I could vote, but so that I can be above and beyond reproach, I'm disqualified from voting. All right. Is there a system to avoid a big organisation to dump many millions in the fund and clear all the available fund to be sold within a few minutes? I'm not sure of your question there, Franco, and I don't think that can happen. Because if there's more money that wants to be redeemed than available funds, we pro rata it. So it's not like some get it and some don't. It gets wound back. So yeah, maybe ask that question again slightly differently. I'm not sure what you mean there. Michelle wants to know whether there will be another trip to the US for members to view properties. I'm not planning it, Michelle. It took 3 or 4 weeks of my time to plan it last time, and for effectively 3 or 4 weeks of my time to earn no money and do it as a service, it's sort of a hard ask. I'm not saying no, but I'm not saying that I'm necessarily planning anything that I'd want to announce tonight. It'd be nice to do it so that people can gain the confidence that I've got in seeing the assets, but it's a lot of work, and it's sort of something I did once because I was over there in the US and living there, and it was a lot easier to do. It would be that much harder to try and organise it over here in Australia. Ben says he missed the start. Is there a summary somewhere? Ben, you can watch the pre-recorded video, which I think is slightly different to tonight's webinar, but that will run you through the same information. I may even use tonight's webinar without the Q&A there, because I spoke a little bit more about the dilution and that kind of stuff. Linda says, thanks for the webinar and explaining in detail. You're more than welcome. I see Raymond has asked a question. Thanks for your detailed information. Support the proposal and hope others agree with the plan too. Thanks, Raymond. I appreciate that you've picked up what I'm trying to do for everyone's best interest. All right, I think that is just about all the questions I've asked. So last call for questions before I go home and pack to head off to Perth tomorrow. So again, g'day all the people from Perth who are coming along and meeting me on the one-day weekend. It's going to be a lot of fun. It's going to be a bit interesting. I've got a couple of Perth case studies that I've found that you will enjoy, I think. Could we have a photo collection of the assets? They're all online on the website there, Jörg. If you go to passiveincomefund.com and check out property profiles, you'll be able to take a look at the properties that we've bought. Good to see online, Gossie. Poolside Vietnam. Giddy up, Jamie Day. Feeling envious. Someone in Fiji and you're in Poolside Vietnam. Amazing, isn't it? The vote opens on the 26th, John. We're just back testing the system now. Pete wants to know if I'll be investing more of my own money. Yep. I've got a lot of money just sitting in the bank at the moment. I'd like to kick in some more. Absolutely. I mean, the fund is amongst the best investments that I've ever owned. I think the return, annualized return since getting in, we looked at it today for someone, is about 14 point something%. I mean, for a managed fund, that is out of the gate outstanding. So hopefully we can keep going well. Hopefully the Australian dollar will keep going down. It's been peaked at about 81 and has dropped back into the high 77s today. So we want that Aussie dollar to go down, 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 and then that will increase our unit price and we'll all be happy campers. Carolyn says, great to hear your continuing commitment to the fund, Steve. Proposals make complete sense. We'll need to hook in via live stream because you won't be able to make the unit holder meeting. That's all right, Carolyn. Love to you and Bill and, of course, the family, particularly that brilliant boy that you have who is now all over property mathematics. All right, cool. Anthony's in Manila. Where is everyone? You're all over the world. It's amazing. Righto, well, let's wrap it up there. Thank you for your encouragement, Peter and Stefan. And no, Bradley, we do not take Bitcoin as payment.